maxim of Western finance in replacement for a ethical or social moral maximization maxim. And this is what I think is a potential way of helping that. You see, many people say that if we want to create a change, our Islamic financial institutions historically aided this change. They aided the social moral dynamics of Islamic finance. And the institution that was perhaps most illustrative of this was the Waqf. Historically, it was the Waqf, or the plural being Awqaf, that played the most significant role in bringing about economic growth and socio-economical justice in Muslim societies. However, Awqaf have been stagnant during contemporary times, both as a concept and as a practice. However, Awqaf or Waqf have within them an operational structure that allows for a very different dynamic. It cuts off the profit maximization concept. A Waqf literally means stand still, hold still, not to let go. Waqfs arose out of the idea of continuous charity, the idea of an endowment institution being set up that would continually facilitate certain modes. Although cash wasn't traditionally seen as Waqf, by the end of the Ottoman Empire, through the ruling of the Shaykh al-Islam, the leading scholars, and a debate that took place, cash Waqf came to be predominant through the Ottoman Empire. What we want to do now, I think there's some technical issues here. Yeah. Okay, what we want to do now is say, how can we use Islamic finance, how can we use our traditional structures to bring about a different dynamic? Now, even though much of this presentation may have seen as a tirade or basically a protest against Islamic banking, I think Islamic banking has been successful in its original aims. Islamic banking has had great growth. Some people presume that Islamic banking, reported statistics say, it has 30% growth. It has now become an accepted norm in many societies, and it provides, at some degree, an alternative to the conventional financial model. So we don't want to throw the baby out the bathwater. One of the things I've often heard from leading Islamic finance scholars is Islamic finance is in its infancy. We've only had 30 years. We cannot have the real model coming just yet. Well, now's the time I think we can. Islamic banking has reached a significant proportion which will allow now for a change, a paradigm of change. And I propose, and my understanding, which are open to discussion, is that now is the time to embed our Islamic finance, our institutions within their Islamic finance. Within the concept of the commercial bank, it's time to embed the Waqf. A way of doing that would be to create an interface whereby a commercial bank, and this is possible because I'm aware of an Islamic commercial bank that has made a condition that its shareholders divert a portion of their profit to a charity fund. Instead of diverting a portion of their profit for a charity fund, if Islamic banks agree to embed within them a cash Waqf, either through a Qard Hasan, by giving a portion of money to the Waqf, or through a one-off payment. Now, the role of the Islamic bank is then relegated to maintaining this cash Waqf. By consistently maintaining, it remains through short-term liquidity through Qard Hasan. At the level of the cash Waqf now, through its capital, can operate on the local level. It restricts its remit to communities. Because amidst all of this global capitalism, there actually has been a finance movement that in principles is very similar to the Islamic finance industry, but up till now has not had a systematic support that allows it to be institutionalized. This thing is the idea of the sustainable local community financing. And if Islamic finance under the protective structure of cash Waqf can engage in these modes, then this could be one way of redressing the direction. So underneath our cash Waqf, which for the intents of this purposes presentation I've renamed Dar al-Amana, we could engage in a very different form of Islamic finance. One could be the use of musharaka and mudaraba financing. Equity-based models can be used even in Islamic banks. We're aware of private equity and joint venture capitalism. But at the level of Islamic banks, that doesn't really drill down to your SMEs. your local community enterprises. Under the cash waqf structure, mutual funds could be set up from SMEs. Cooperative processes could be involved that involve community financing. There already is something known as crowdfunding. I encourage all of you to go to this website, Grow VC, which allows people to adopt what in essence is musharaka-based ventures. And there are various examples of good Islamic musharaka ventures, such as the First Ethical Musharaka Fund, SAH Global, and RHT Partners, which are already engaged with this. If we can systematize these things through the cash waqf structure, then it would be a great achievement. And the reason why it's best done through cash waqf structure is often the profit maximization perspective adopted by commercial banks makes them tilt or incline towards debt-based characteristics when it comes to ventures, and not initiative-based characteristics, not characteristics that are genuine. Another thing that the cash waqf can do at the level of the community is it can introduce open markets. Now, if we look at the nature of retail trade in much of the world, in Britain, for example, the 5 largest supermarkets control 2/3 of all retailing. What this does is it basically destroys local trade, and Islamic banks under the cash waqf can rebring the idea of open markets. A key aspect of Islamic economy was the souk, the open market, a market where anyone had a right to set up a stall. Anyone had a right to engage in trade. It was real free trade, and it provided a social dynamic for the communities. In a world which is increasingly becoming depersonalized, where people would rather deal with depersonalized financial institutions, Islamic banks can bring about, through the bringing about of open markets under the cash waqf structure, realistic discourse whereby it brings about the souk at the level of the community. They could also bring about currency. Islamic banks could engage in different currency for these markets. Currency linked to gold and silver and barter commodities. An example would be, please go and look at the Open Trade Network, opentrade.org.uk. Islamic banks can also, one of the constant criticisms of Islamic banks is that they do not engage in interest-free loans. Well, there's a reason for that. An Islamic bank is an Islamic commercial bank. Commercialism and interest-free loans, which is generally a charitable initiative, do not go hand in hand. Although, if we cut off the profit maximization incentive and are operating under the cash waqf structure, then the loans can be incentivized because the maxim becomes social moral ethics, and Islamic banks can then administer interest-free loans to the people in the most need, and they can leverage the internet and cooperate with microfinance institutions. There already are institutions out there that are operating on this, and I encourage all of you to go to kiva.org. Anyone who says interest-free loans are non-viability or not practical or a disgrace or not practical, they just need to go to Kiva and have a look. And Kiva, the last time I checked, we're not basing it on Islam. Production. Islamic finance at the local community level, and this once again goes back to the local community level. At the top level, we can say the commercial bank will keep the story going. It will keep engaging in what it's doing, the Sharia-compliant Islamic finance. But under the cash waqf structure, the Sharia-based Islamic finance can operate. Sharia-based Islamic finance, which begins with local communities. Islamic finance can revive the concept of guild. It can bring about people or communities of productive infrastructure that have a common ethos. It can replace the employer-employee relationship with that of a master and apprentice. This would allow for a more balanced local economy. It would allow for service to ideals not necessitated by profit. And it would allow the owners, the local community themselves, to be owners of the nature of the commerce. And there are a couple of success stories out there. One is the Amul model. Amul, for anyone from India, is symbolic of milk. And this was founded on a cooperative model, a model that sought to eradicate the exploitative trade transactions brought about the local cartel financial institutions and the use of the middlemen. Instead, the dairy manufacturers sought to establish a cooperative structure that encouraged cooperation, and it was incredibly successful, such that it brought the white revolution in India, which means India now is the largest manufacturer of milk. Another example is the Briar Patch Co-op, which is the leading natural food store in the Nevada country. Once again, they're a vibrant, important community very much similar to the guild structure. So it can still exist, and Islamic banks can help facilitate it. Another thing Islamic banks can do is that they can facilitate community currencies. The systemic crisis that we saw previously, the credit crisis, was a direct result of the nature of the banking system. It is systemic. And many commentators, such as Bernard Lietaer, and I encourage all of you to go and do some research on it. Bernard Lietaer, the author of The Future of Money, proposed a white paper where he proposed community currencies as being a way of bringing about cooperative stability. The idea being that if a currency is limited to a community, the community has its own currency. This currency can be interest-free, stable, sustainable, abundant, and would provide a built-in buy local bias. This is the natural defense to the effects of global corporate globalization. And it did exist. Example would be the Weir Bank, which was founded in Switzerland during a time of financial crisis as a credit clearing association, and literally resurrected that economy. Islamic banks can bring about the same concept. Well, what about if you want to buy a house? I need to buy a house. Well, the Islamic bank, your mode is not providing anything practical. Once again, if you want to buy a house and you want to buy it on the pretext of commercial banking, then you're accepting the continually inflationary prices that property is likely to increase by nature of its being capitalized, by nature of debt being continually pumped in society, leading to inflation. This is not a short-term solution. This is not a solution in any means. Under the cash waqf structure, there can be a completely different dynamic, a community-oriented dynamic. Most people who think that they own properties don't really own properties if they have a conventional mortgage. They have the illusion of ownership. The moment they default, their property is taken away. So if the only case that you look for is the ownership or the illusion of ownership, then maybe that can be brought about through a far more cost-effective community means. Under the cash waqf system, the Islamic bank can set aside money for community land trusts. And I encourage all of you to go and check out what these things are. The trust will buy the land specifically under the remit of retaining it for the use of community. Construction, at the level of construction, if you use products, if you use various materials, then this will produce a great reduction in prices. And then this property can then be leased out on life-term leases on inheritable basis. So if someone dies, it goes to gets bequeathed to the future generation. And likewise, they have the option of renewing the lease. The idea being, or they can take complete ownership. But the idea being that once they take ownership, if they ever want to resell their property, their resale is restricted to capped prices, and first option goes back to the trust. What this does is ensures the land and the property is removed from the capitalized market and is accessible to the local community. I encourage all of you to do more research, to go to www.cltnetwork.org. This model of the community land trust can be replicated by the model of vehicles. If you want vehicle finance, cars, some of the better models of Islamic finance that I've seen are where banks actually literally own they literally own vendors. And there's some very positive examples I've seen in the Middle East. This can be further adapted at the cash waqf level, whereby a pool of vehicles is maintained for the purposes of the community, similar to the community land trust model. This can also be adopted for community education trusts. People who previously would not have access to education could be encouraged through a system of scholarship, of interest-free loans, whereby they pledge to educate other people and they work with local education authorities. Please check out the link once again. Islamic banks. There's been much discourse in the world today about the use of gold and silver. At the level of countries, it's very difficult to see how this would come about, except through much struggle. But Islamic banks can introduce gold and silver deposits by allowing for depositors, and this doesn't need to take place under the cash waqf structure, this can take place under the Sharia compliance structure as well, for them to convert their currency into gold and silver. And on a side note, this would be very wise to do, because the economy that we see today is the fiat currency, floating currency system is illusory. It's based on the concept of value. And even though there is no benchmark,